Hey everyone, welcome back. I'm so excited that you're here. Today, I'm going to be talking about investing with a self-directed IRA and specifically about how I've used self-directed IRA monies from other people for private money lending. And so I want to kind of show that to you. I've been doing this since 2018, and I just did the numbers, and I've generated over $300,000 in either assets or payments to money lenders. And that might not sound like a lot because there's people out there doing millions and millions, but this is just one of my investment strategies. And the crazy thing is, my very first deal, I did it with $5,000. And what's even crazier is I did another deal where I used as little as $100. So you can start at any level. You don't have to have 50,000, 800,000, or, tons of money in your self-directed IRA account to do what I've been doing. So I did a video the other day about how to buy a property. So today we're going to delve into how you can become a private money lender. And I'm going to talk a couple of little tricks about how I used a very little known option agreement to get a property under contract when I didn't have enough money in my self-directed IRA to actually purchase the property. So without further ado, let's get started. Okay, everyone, thanks again for joining me. And at the end of this video and also down in the comments, you can get my free how to grow your small dollar IRA. Now, the reason I focus on small dollar IRA is because, there's a ton of people out there that have less than $50,000 in their self-directed account. And the money's just sitting there. Now, I'm not talking about your 401k with your employer or anything. I'm talking about the actual, self-directed IRAs. And this is such a great strategy to grow your retirement accounts. And the only thing, they have to be with a custodial company. So I'm in the Dallas-Fort Worth area, so I use Quest, but there's a million of them out there. So it's one of those wealth building strategies that people don't really talk about because they think it's too complicated. And I have literally just made this one of my arms of my investing. And there's no reason that you cannot learn this strategy and do what I've been doing and having the success that I've been having. So let's get started. So like I said, it's a great way to grow your retirement account. So the other day I did a video about buying a property with your self-directed IRA. Today we're going to focus on how you can become a private money lender. So first off, let me just recap that, you can have a traditional, a Roth, a SEP, a health savings account, the education savings account, Cloverdale, a checkbook IRA. The key is it has to be with a custodial company that allows you to do investing with your self-directed IRA. Now, let me comment on this for a second, because you can invest in gold and other things, Bitcoin, I don't know what all. But what I'm going to be talking about is real estate. So I haven't done any of those other things. I've just focused on real estate. Now, this is really like passive investing. So let's say you've always been interested in real estate, or maybe you're a real estate investor and you've got, $500, $1,000, $5,000 in one of your self-directed IRA account. So you can either be the borrower, lend the money out. So I use a lot of private money lenders when I purchase properties, I borrow it. And of course you can be a lender. So how do you build that list? Well, this type of lending, private money lending, is very relationship. It took me a while. You have to network, it's on reputation. There's a lot of vetting if you don't know the person, or if you don't know, there's a lot of vetting in just, knowing. You still have to know how to analyze a deal. You still have to know, what paperwork to do. It's not complicated. It's just a process that you need to learn. The great thing about private money lending is it's negotiable. There's no set in stone, like, okay, you have to do this or you have to do that. It can be for short term, like 6 months, it could be 12 months. I've done them for 3 years. So consider what I call the churn of your money. So if you're investing like every 6 months, there might be fees. So you want to make sure that you're not paying more fees. But I'll give you a little tip right here, is that when I borrow money, I pay my the people I'm borrowing money from, I pay their fees. So if you're a private money lender, you get the borrower to pay your fees. Okay. And then be involved with the paperwork. That's super important because you'll want to know, are you in what position you are in? And, it's your money. The bottom line is you got to protect your assets. So okay, we just got right into that, protecting your assets. So when I'm talking about the asset here, I'm talking about the money that's in your account, whether you have $100 or $5,000, $50,000. So number one, you want to vet the deal. So this kind of goes into, you have to know the numbers. So if someone brings you a deal, so I've been investing for a while, so I know how to vet the deal. And so when I approach my private money lenders, when I want to borrow money, I give them a report. I give them an analysis of how did I come up with the number. Vet the borrower, meaning me. So because I don't have credit. The coolest thing about private money lending, I see a lot of posts all the time about, well, I've maxed out my loans and how do I get more loans to buy properties and how to scale. This is how you do it. This is how you do it. You get private money lenders that will lend you money out of their self-directed IRA. It's a win-win. You get to buy more properties because it's relationship built. Most of the time, there's no credit check. There's no, it's easy. It's, the fees aren't as high usually as a hard money lender. So you need to make sure that you know who you're lending to. Always be in first lien position. Now, because I've been doing it for a while, I've actually worked with people where they know me and, it's been a small amount and they, they were in second lien position, but, I paid them right back. So it's never, but if you're new to this, always, always, always be in first lien position. What does that mean? If the deal goes wrong, then your IRA is first in line to get paid back. And there is required paperwork. So because, you're growing, basically you're growing your IRA account tax deferred, in some cases tax free, but tax deferred. And there is certain paperwork that you need to ensure that, number one, that your assets protected and that you're not taking distributions, if you know what I mean. So when you lend out money, it's not a distribution. So you're not going to get a tax penalty or, have 10% taken or any of things like that. But you have to know what the required paperwork is. And then always close at a title company. Now, this is not required, but I do it. I mean, I guess if you had an attorney that knew how to do this and he closed it, but I close at title companies with an attorney and have to make sure that they know how to do this paperwork because it's a little bit more than, getting the title policy. I mean, things have to be worded in such a way so that the ownership of the asset is clearly stated if it's the IRA or if the first lien position is an IRA holder. And setting the terms. And so we're going to talk more about that, about how it's so flexible to work with private money lenders. Now, I talked about the first lien position, so crucial, so important. So when I talk about vetting the deal, so this is just like, where I always talk about location. Where's this property located? Is it something that you would want to buy? So now what we're doing is we're talking about this as if you are lending, right? So when I talk about vetting the deals, like where did the investor get the numbers? Where, you need to do your double. If you don't know, you need to have someone else that you trust run the numbers for you. Is it something that you would want to own? And the reason I put this question in here is because if worst case scenario happened and you had to foreclose on the property and take it back, or your IRA take it back, is it something that you would want to own as a rental, as a short-term rental, as a flip, as a owner finance property? So would you want to own it? So again, I talk about the after repair value, ARV. So who's running those numbers? For example, I've had investors come to me and they're brand new. And so they don't really know how to vet the deal or don't know how to analyze repairs and factor in the actual cost of what it's going to get the property back up to after repair value. So you just need to find out, if you're getting ready to lend money on a property, how much stake is in the game, because you don't want to lend 100%. And then when and where is the deal closing? And that's important for the paperwork. So with private money lenders and with using self-directed IRAs, I can tell you from personal experience, unless you have somebody at the custodial company that's just has done it before, knows what's going on, all the paperwork is exactly the way it needs, you might get the money in 3 days. Okay. I've never had it close sooner than that. You should plan on 7 days, because there's a lot of back and forth with the custodial company and the title company, just to make sure the paperwork's all correct. And the other thing is, if you have multiple lenders, so multiple people with a self-directed IRA, which I've done, I'm going to show you a case study on that today, then they all have to, so there's a lot of review of the paperwork, which is a good thing, but that takes some time. So vetting the borrower. So when I approach someone about, I want them to lend money to me to buy a property, what does that look like? Well, first of all, how do they know me? What's my reputation? What's my experience level? So personally, I don't lend when I'm a private money lender with my self-directed IRA. I just have my own rule that I don't lend to first-time investors unless I'm a partner on the deal. I really have to, and I really, know the numbers and all of that, because that counts, right? Because one of the things you don't want to do is you don't want to have to take the property back, right? Do they have a signed contract? So, and you need to see the paperwork. And then what's the exit strategy? How are they paying you back? That is like the key. How are they paying you back? And of course, it probably goes without saying that get everything in writing, but just in case, get everything in writing. And then the ARV, the repairs and the comps, who's running all of those numbers? Because sometimes those can be off, and that can really have a detrimental impact on the value of the property and what you're lending. So you just want to do I talk a lot about doing due diligence, and I'm saying this both if you're the lender, even though you're not purchasing the property, act like you are purchasing property. How would you run your numbers? What kind of repairs? How did you verify what kind of repairs they are? And then, always be in first lien position. Because what you don't want to happen is you lose your money, or you don't get paid back, or you have to foreclose, or, it was just a whole bad experience because they were inexperienced. And unfortunately, I have talked with people that get into a bind because they lend money out of their self-directed IRA and they don't understand about one, being in first lien position. And if you're second, third, or fourth, or, oh my gosh, then, you're not going to get paid back if something happens. And I always think of worst case scenarios. Like what happens? I mean, we don't like to talk about it, but if the person that you're purchasing, that you're lending the money to, God forbid, but let's say they get hit by a bus, what's going to happen to the property? How, you have to think about these things. Now, one of the things I do is I have a joint venture agreement with every deal. So there's the paperwork for, to purchase the property. There's the paperwork to, for them to become a private money lender. There's a promissory note. And then when I have multiple people on the deal with their self-direct IRA, we also have a joint venture agreement that spells out like all the what ifs, because you want to be prepared if something happens. I've never had anything happen, but that doesn't mean, knock on wood, that it wouldn't, but I want to be prepared and I want to protect not only my assets, but if I'm in a deal, I want to make sure that number one, I get the money to do the deal, but also I want to be able to pay my lender back. That's probably the most important thing to build reputation. So what's the benefits to being a private money lender with your small dollar IRA or just a regular IRA? I mean, I'm talking about, I'm talking to you people that have, the small dollars, the under $50,000. I mean, if you have 100, 250, 500,000, you can do these same things just on a larger scale. So what is the benefits? Well, number one, it's a great wealth building strategy. You can increase your cash value in your IRA. So I'm going to give you, one of my most famous deals was I did it with $5,000. I mean, it was just, I bought the property, I sold it for 50, it's just crazy what you can do and the money you can make. And probably the best part about it is that it's tax-free for now. So, and I don't have any penalties for, it doesn't offset, the amount of money that I'm putting in because I'm not doing it. It's coming from real estate. The terms are flexible. So when you get your network of private money lenders, I typically pay, 2 points, which is the loan origination, and 10%, but I've also done 8%. I've also done no points. I've done 3 months to 6 months to 3 years. So it's all negotiable and flexible. And it's really about, who you're doing business with as far as, your network of private money lenders. Now, there's a bunch of documents, like always, but no more documents, a few more documents than when you normally purchase a property. There's a warranty deed, and then, like I talked about, the JV agreement between the account holders, the contract, the direction of investment, a promissory note, and then whatever amendments that I need to put into the deal if I have to do amendments. Now, in my prior video, if you haven't seen that one, go watch that one because it talks about how you buy a property. So it's the same type of paperwork, but what I'm adding is I'm adding a promissory note. So I'm personally saying I'm going to, pay back my lenders, and that makes them feel good. And it gives them that sense of, okay, I am going to get my money back. And then also a JV agreement between the account holders. So what I mean by that is I have an example here where I use I've used 6 different people on one deal. And so what happens, if I get hit by a bus, what's going to happen to all those people? So the JV agreement is a behind the scene document that says, hey, if this happens, blah, 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 this is what we all agree to. And all of the account holders sign that document. So you set the terms, you being the private money lender. So it's between you and the account holder. So when I have a deal, depending on how long I need to keep the money, who I've done business with before, I'm all about people making money too. So I want to pay them the 2 points or the 10% interest, because I want to keep my private money lenders happy and coming back. Like I said, the terms are flexible because depending on what my exit strategy is, I could be long-term, it could be short-term. I have had offers of up to 10 years, which is great. Just the way I structure some of the deals with this, I haven't had to do that. The custodial company only needs to know how much each account holder has an undivided interest. So what do I mean by that? Well, on the previous page, I had about direction of investment. So the custodial account company doesn't get involved with the transactions in terms of what you're negotiating with your private money lender. They only are interested in the direction of investment, how many dollars from Joe's accounts coming out, how many dollars is coming from Sally's, that kind of thing. But they don't get into the transactional side of negotiating what you're going to be paying a private money lender. And you as a private money lender could say, I'm only going to lend at 12%. I'm only going to lend for 6 months. I'm only going to lend if I get 2 points, you pay my fees, and it's 10% interest. So all of that is so flexible. It's between you as the private money lender, you're the account holder, and then whoever is wanting to borrow money from you. So if I called you up and said, hey, you might say, well, Nancy, I want to do 12%. I'm like, well, you know what? I have a list of other people that I only pay them 10. So if you want to be in my pool, I'm going to pay you 10. But I have that luxury because I've been doing it and I have a network of people. So if you're just starting out as a private money lender, typically it is 2 points that is paid to the lender and 10% interest. So anyway, I hope that's not too confusing. And when I say lender, I'm talking about you, the self-directed IRA account holder, as the private money lender. Now, here is an example of how the earnings work. So this is the deal I was talking about. So I had a deal where I literally used 6 people because since I specialize in self-directed, helping people with small self-directed IRAs under 50,000, I get calls all the time. Can you use money? Can you use money? And I have a list of people who want me to put their money to work for them, and I'm happy to do so. So in this particular case, I was buying a property, and so the purchase price was right around 150. So this was the amount that everybody was putting in. So the way you do this is when we talk about the warranty deed and the JV agreement, account holder 1 does not own the property. What it is it's the custodial company. So I used Quest before. So it's Quest Trust Company for the benefit of, you might see that FBO, Joe Smith, IRA account number, blah, 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 blah. So that's how it's kind of wordy, and it's all goes on. Now, all of these people were in first lien position, but you're saying, Nancy, there's 6 of them. How could they be in first lien position? Well, it was part of their percent of lending. So here's the 100%. And then based on what they put into the deal, so they were lending money to me so I could purchase a property. So here's this person put in $50,000 towards the deal. So they owned 33%, their undivided interest. So they're all first lien. Now you're saying, okay, that's a little convoluted. Well, yes, but remember I talked about the JV agreement, right? So that's behind the scenes. So all 6 of these account holders had to agree that if Nancy got hit by a bus and we had to sell the property, how was that going to happen, right? How was that going to, so we set out the terms of what they would agree to if for some reason, the deal, I couldn't pay them back, right? Not because I didn't want to pay them back, but because, something happened. So then on this particular deal, I paid 2 points, which, okay, the loan amount was $150,000 that I was borrowing from these 6 people, and 2 points, which is like the origination fee when you go get a regular mortgage, was $3,000. And then I was paying them 10% interest. So that was $1,250 per month. Now, how does that all shake out? Well, and when I talk about the warranty deed and the promissory note, this is all like spelled out who gets what. And I didn't have to write, 6 checks. I wrote 1 check for $1,250 and I sent it over to the custodial company. And then they took the $1,250 and distributed it every month into their accounts. So the 413, the 335, the 250. Now, for some of you that are like trying to do the numbers or whatever, I did have to kind of round up. And because the custodial company doesn't do that, right? So we just said, okay, this is the amount that everybody's getting paid. And part of that JV agreement says how much everybody's getting paid. So they all know it's not a surprise or anything. And then the points, what happened was at the closing table, that was just, taken out as long as the first month's interest. So this is what each account holder was paid. The $995 went to his account. So when I say paid, not to the account holder directly, it went to the custodial company, and then the custodial company takes that check, and based on the documents of direction of investment, they know to put, $413 a month into account holder's account. And so his balance every month, this happened to be, I think, for 12 months, he got $413 just going into his account. Now, that doesn't seem like a lot, right? But you know what? He had $50,000. And so he wasn't really going to do anything with it. It was just sitting there and it wasn't collecting any interest. So he was actually getting 10%, not quite 10% interest on his money. And you can see these 2 people had $5,000. So they were getting $42.50 a month. Yay. The other thing I did on this particular deal is I paid their fees. So because there's a fee when you bring out the money, it's not considered a distribution. It's just the fees that are going to be sent to the title company from the custodial account. So the custodial account withdraws the money from your, SEP account, IRA account, traditional IRA account, and they're going to charge you a fee for that. So I ended up paying the fees for all these folks. So even though she only had $5,000, she's going to end up getting at the course of the year over $400. That makes it $5,400. And then the next time she invests with me, she can put in the $5,400. This was the most that she could put in. So, and then that'll be a little bit higher. So you can see, like, if you have a child that, 10 years, they've still got the educational account, or you have a health savings account, hey, that's money that can just go in there. And it's not taxed. So I think that's the important thing. That may be taxed when it comes out. So you need to check with your CPA. So here's a case study on another property. So this case study has to do with, I am purchasing the property. So Nancy is buying the property, and I'm going to do my own due diligence before I go to my private money lender. So this was kind of what the case study was about. So I ran the numbers. So I found out that this property was worth, once it was all fixed up and everything, $135,000. So the ARV was $135,000. I was able to buy it for $70,000, and the repairs were approximately $15,000. So it was a 3-bedroom, 2-bath, which is kind of what my go-to properties are. And the rents in the area were around $1,350 a month. So that's kind of where I start at when I'm talking about, knowing and doing your numbers. So remember, I'm going to be the borrower here. So first, I always talk about this, have an exit strategy, and I like to have two. So you have to know your numbers. And then what I normally do is I'll look at rentals or owner finance when I'm working with self-directed IRAs. Now, on this particular property, my first strategy, I wanted to purchase it with my own IRA, but I didn't have $70,000 cash because I had my IRA money tied up in other properties, right? So I didn't have enough. And if you watch the first video, I talk about how your self-directed IRA has to own the property in whole. You can't lend to yourself. Okay. So I was like, okay, well, let's see, because of the location, the age, I'd had to hire a property manager, even the expenses, income and out. If I was doing it through my IRA, I don't really like doing that. So owner finance seemed to be the better strategy because, I have a loan servicing company. They take all the money and that kind of thing. But again, I was perplexed because I didn't know. I really wanted to get this property, but I wanted to have my IRA own it. Okay. So how could I figure out how to buy a property and have my self-directed IRA own it, but I don't have enough cash in my IRA to purchase it? Okay. So you know what? I used an option agreement, and this is a very little known way, a system, if you will, how to purchase a property. So basically what happens is the IRA takes ownership. It can still be a rental. Okay, so I still had to figure out how could I get my self-directed IRA to own this property? I didn't have the $70,000 in cash. And so what I did is I used what's called an option agreement. So this is a very little known strategy. In fact, I didn't know about it, and somebody told me, and I was like, oh, that is really cool. Now I'm a broker here in Texas, and I looked on, all the track forms and everything, and you cannot find something called an option agreement. So I literally created my own option agreement. I sent it over to the custodial company. I said, will this work? And she said, yes. And I was like, great. So the property can still be a rental owner finance, but here is the thing that I had never heard of, and I'm telling everybody about this now. I used $100 from my SEP IRA with an option agreement, and now that property is in my self-directed IRA. So I had the property under contract under my LLC. I simply did an amendment and used an option agreement, and I switched ownership from my LLC to my IRA with $100. Can you wrap your head around that? $100, and I got a $70,000 property because when I bought that property, I used private money from other people. So this is how I did it. So I used 2 private money lenders. So I needed to borrow $70,000. So the 100 came out of my SEP IRA, but I still need to go to the closing table with, the purchase price. I needed the money for 24 months or less. So we actually wrote the contract. Now, this is what I'm talking about is the promissory note, the JV agreement with my private money lender saying, hey, I need the money for no more than 24 months. And if I pay you back, in 6 months or 3 months, there's no penalty, right? So we wrote the contract. So one person had 40,000 and the other person had 35 because I was actually, getting the $5,000 for closings and whatnot. I paid them 2 points. I paid them interest or $500. I paid them 8%. And the reason was because these are people that I have worked with for a really long time and they were okay with that. I covered their fees and my closing costs were about $2,500. So that's how I did that. So I used $100 from my SEP IRA, and so now I will own the property. So I'm purchasing it, and the funds that I used to purchase it from the seller was from private money lenders. Okay. And so the paperwork, I mean, I'm making it sound a little bit easier than it actually was, because the title company actually had a little hard time with this one, because we were using a new title company. But you just walk through those steps, right? And I want to do a shout out because the custodial company was very helpful in helping everyone understand the paperwork. Now, the two private money lenders, they were completely on board with it because they had done business with me many times in the past. So what did I end up doing? So I ended up selling the house through owner financing. So I have a mortgage, if you want to call it that, from my two private money lenders that I borrowed money from. So I ended up selling the home, and I ended up selling it for $115,000 because I didn't make any repairs to it. Remember, I said the ARV was 135. So the person that purchased the home paid me, or paid my IRA, because my IRA owns the property because I used an option agreement. So my down payment was 11,500, or I'm sorry, their down payment was 11,500. They paid me $800, which was a difference in what I'd already gotten. The interest was 5,000. Remember, I was paying 500 a month. And then they ended up refinancing out early. So my total profit was 46,296. And all of that money went right into my self-directed IRA. What? Okay. And I only used $100. So I know it's a little bit more complicated than I'm making it sound. But what I'm saying is this is a process. This is a system. This is a strategy that you can use. And this is what I teach. This is what I talk about. I looked at the numbers and I was like, oh my gosh, this is so amazing. And so that $46,000, let me just kind of share this with you. If I had flipped the house, just say I went out and got a hard money loan and, I flipped the house. Well, the $46,000, I would be taxed, right? So let's say, I sold the house, I bought it, sold it a couple months later, I'd be taxed. So the way I did it this way is when that money, that $46,000 went into my IRA, I'm not taxed on it until I take it out. So let's say I take it out, maybe I only take out 20,000, because I have a deal or I want to do so, go on a trip or something. So I will only pay taxes on the 20,000. The other 26 is going to sit there. Do you get what I'm saying? Do you see how this is such a good wealth building strategy? Now I'll eventually get taxed on it. But the thing is, I could just roll that over into another property. I could be a private money lender with that money. So I can continue to grow that amount. And people do this all the time. There's, people who've been doing this a lot longer than I have. And they've got amazing stories of how they've made money when they sold a property. And, you avoid so many tax liabilities doing it this way. Now, I'm not an accountant, I'm not an attorney, make sure you check with your financial advisor, because I'm not one of those either. I'm just saying that these numbers and the strategies that I teach are based on real life experiences. This is the success I've had with helping people with their self-directed IRA. Now, I just want to say thanks for watching. And if you want to learn more about investing with your self-directed IRA, then I am giving you my free ebook to get started. It kind of goes over the fundamentals, what you need to do, and it's super, it's a lot easier than, I hope this video made it sound somewhat easy, but it's easy to do. All you have to do is have the dedication to learn the process and the paperwork, and you will be well on your way to either being a private money lender, or like I said, watch the other video about how you can buy properties. If you like it, give me a like, and then subscribe and share my video. I really would like for you to do that. And again, the link to my ebook will be down below in the comments section. Thanks so much. Happy investing.